Hey everyone, I'm Tarek Morshed with the Morshed Group at Sothebys, where we specialize in representing entrepreneurs and founders in their residential real estate needs. Welcome to the Entrepreneurial Home Podcast, where we interview Austin's most successful men and women and discuss their business journeys as well as the entrepreneurial home that really empowers them to thrive, both in business and in life. During COVID, we are changing our video podcast format to deliver everything to you via Zoom with the intention of still delivering on amazing values, idea shares, as well as supporting our fellow business owners and entrepreneurs in a very challenging time.
Hi, everyone. Welcome to this special series and edition of the Entrepreneurial Home Podcast. Obviously, in COVID times, we are Zooming our podcasts. Today, I'm really excited to have Frank Barbella of SOLV Risk Solutions on board here for this version of the Entrepreneurial Home Podcast. Welcome, Frank.
Thank you. Glad to be here.
Good. And, I'm as I always love to do, I always like to give a little bit of background and context on my relationship with our guest, whether that's a deep history or not. And so, for our listeners, it's been about 2 years, Frank. Time flies. Yes, it's been about 2 years. We ended up connecting via LinkedIn through some kind of a marketing thing or some version that was happening around entrepreneurs, and our paths crossed. At the Morshed Group, obviously we specialize and represent entrepreneurs and founders, but I also wanted to just network and connect with other entrepreneurs. And somehow Frank's name came up. I reached out to him. And I just said something along the lines of, hey, I'm just really looking to build great relationships with other fellow entrepreneurs who are all about leadership and growth. And I want to be able to learn from others and so on. Would you be up for getting together and, and then also see if there's any opportunities to talk about businesses, if there's any intersections there that makes sense. But primarily to really just talk about entrepreneurism and mentorship and mentee relationships and things like that. And Frank was incredibly gracious. So we met. We ended up talking for 3 hours straight, it felt like, and had an amazing conversation touching all kinds of things around life, leadership, growth. So it was a pivotal conversation. And, I'm just thrilled to have you on. Because I think that you bring what I love about entrepreneurism, or one of the things I love, a passion for others, a passion for growth, a passion for building teams, and then a passion for teaching and sharing, as well as being taught to and being shared with. And I think that those are like kind of four really beautiful spectrums of the entrepreneurial journey, right? And so, and to our listeners, man, Frank has, I think, had, I think to me, he is the consummate entrepreneur. He's just got this really wide range, which I'll let him speak into, of entrepreneurial and company experience as well as success. He's running SOLV Risk Solutions today, and in classic, I think, niche modeling and entrepreneurism, right? Which I've always also loved about entrepreneurism. He's in the insurance industry and has been in the insurance industry for a long time, but he's really figured out where the niches are within it, as well as where his value add to the industry is in a way that he's passionate about and his company's passionate about. And I think that you guys are just doing some really, really cool stuff, whether it's in construction or technology, or businesses, the medical industry. And again, I'll let you speak more into that, but I love the way you guys are being strategic advisors and really leading people and companies around insurance in a way that they're just getting information they'll never get elsewhere. That's both strategic and forward thinking and really solves a lot of problems, as well as preventing a lot of problems. And these are things that most companies and people would never look at. I know I never look at my policies. as most of us probably don't. So anyway, enough about all that in the sense that I don't want to hog the spotlight here. This is about you, Frank. So, hey, tell us a little bit about your entrepreneurial journey and your companies and what that looks like today and so on. And by the way, also to our listeners, when I say Frank's the consummate entrepreneur and really led a life of growth, he's an EO member, Entrepreneurs Organization. You guys have heard me espouse about that organization a lot in the past. I'm an EOA, kind of the accelerator program. So those are companies where it's $1 million plus in revenues and the original founder. And then also YPO, where your companies at 12.5 million plus in annual revenues and at least 50 employees. So obviously, Frank, you've kind of scaled the spectrum. And so again, really excited to have you here today. So yes, take it over and tell us about your entrepreneurial journey and who you guys are as a company today, however you want to take that.
Awesome. Well, Tarek, I really appreciate that. And kind of to touch on kind of entrepreneurship and as well is at the end of the day, all of us are really just extremely good problem solvers. And we all have varying degrees of intelligence, but I think ultimately it's a skill set that we all bring to the table because we all want to solve that ultimate formula and on success. The ones that are truly passionate about, what they do and in their specific area of expertise or passion. And so, mine was led into, I was, even from a young child, I always, hustled to make money, whether it was, even in the middle of Cleveland, Texas, which is in the middle of nowhere, East Texas, going around, everybody had 10 acres of property. So, everybody needed grass cut, everybody needed their car washed. And even though it wasn't, a wealthy area community, I would still walk around with my, push mower and mow acres of land with an 18-inch push mower. And,
God.
so just to make money. And then I got older and wanted to go more in the investment banking area and ended up getting a finance degree. And as I was actually finishing up college, my father-in-law actually was killed in a car accident suddenly.
Oh, wow.
And so I took over my wife's side of the family, her uncle's automotive shop, because my mother-in-law was actually the business manager, if you will, or office manager. And so she ran all the back office. And so I went in because she couldn't work. To finish up my last semester of school, I quit my job and did her job for 6 months while I finished up.
And how old were you during this, by the way? It sounds like you're like maybe near 20s or early 20s.
Yeah, early 20s. And I ended up having to pay for my way through school. So it took me a little 4 years, but I think I was 23 at the time. And so ultimately took that over and did the insurance renewal. And really, my agent back then was a guy named Pepper Snyder. He worked for a company called Universal Underwriters. It was a Zurich-owned company. And basically did the renewal and said, man, this is really cool. You're advising business owners on the risk that they have, and the only job that I was, kind of had a couple of offers. They were all financial analyst roles. And so ended up graduating, told Pepper, hey, if you guys ever have an opening, let me know. And he's like, well, we really don't have many openings. And about 3 months after that, I had became a financial analyst for a company and was doing that role, and got a call and said, hey, come in for an interview, and ultimately got the job. And so I did that for about 5 years in the Houston area. I grew through my book of business and was successful and ended up getting the nod to go run a region for Zurich. At the time, I had 2 children, and we moved to Chicago and in '04, and did that for a couple of years, and kind of in middle management, if you will. Just kind of saw the bureaucracy and the politics and inefficiencies, and and was very, very, very frustrated within a short period of time. And that kind of started me on the journey. My father, a wonderful man, he basically told me, Frank, I know you want to be an entrepreneur and you want to own your own business, but you got to have $1 million to have your own business. And so, that wasn't in the sights. So, but had saved my money and then had an opportunity to buy into a small family-owned firm, insurance agency in Chicago. It wasn't my family, but we had a strategic relationship with that agency. So ended up buying out one of the 2 brothers. They had inherited it from their father in 1992. And in '06, I bought the brother out. And we were about 15 employees at the time. I saw dreams of grandeur.
As all entrepreneurs do.
I didn't see the 58 5-drawer lateral file cabinets that we had scattered through thing and paper everywhere, and I saw here's an opportunity to grow a business, and so I bought in, and it was very good for me and my family, and
this was around '06 or?
It was July of '06.
Okay, got it.
Probably in January of '06, I had told my wife, hey, let's move back to Texas and actually start an agency from scratch. And then this opportunity, it was kind of, it already had a running start, if you will.
Got it.
And so we were about 15 employees. Over the next 9 years, I grew that to about 120 employees.
Wow.
Different, I did 16 transactions over that time, acquisitions, the organic side of the business, hired folks to come on, but we were your traditional insurance broker. In the late 2000s, I started doing some private equity diligence work, where when they're buying a new portfolio company, they want to understand the risk from a policy perspective. The prudent ones do. And so we started doing this work, and what we ended up realizing is every single time our team was doing diligence, we were finding issues in the policies. And about 70% of the time it was admin errors. So, applications that got to a carrier and there was mistakes, or a carrier person making mistakes on policies. And so we would fix those. About 30% of the time, it's what we call underwriting opportunities. So basically an underwriting looking at the risk and saying, you know what, this is more risk than I want to bite off. So let me just limit the risk on our side to make sure we make money. So ultimately we, did that, and ultimately sold that company to a large global broker, and moved back to Texas. And that was in July 15, moved back to Texas. In March of 2016, I started my new firm, SOLV Risk Solutions. And, in reflecting during that time, just really came up with what are the, I like to say we provide solutions to breakdowns as entrepreneurs in whatever, sector we're in. We provide solutions to breakdowns in the insurance sector. If you're in CPG, that's what you do in your world. You're trying, if you're in real estate, that's what you're doing. You're creating a different way to do it. And that's basically what we do in the insurance world. The reality we know is the fact that everyone hates insurance, and no one wants to talk about it. And as soon as, I walk into a YPO cocktail hour or an EO cocktail hour, and somebody's talking about their really cool brand CPG or this really cool manufacturing process or your really cool egg farm. When I say, well, I work in insurance and risk, the music stops.
Right.
And the reality is it's because nobody has had a really great insurance experience. And when you boil it back down and you look at the process, the entire industry is broken. And the reason is there's the barrier to entry into our world is very, very low. So it's actually even, it's similar to the real estate market, except you guys go to school for a lot longer than we do. We go for literally 2 days. We take a test, and now we're an insurance agent.
Wow, I didn't know that. Interesting.
Yeah, and you go out and you sell these really long, complex legal documents, and it's not just one. It's many of these legal documents, and you're running around, and they're ever changing. And the breakdown in the industry is the CFO of a large mid-market company isn't reading the policies. The general counsel's not reading the policies. The CEO, founder, entrepreneur is definitely not reading the policies. Right. And the breakdown is the broker never reads the policies. Wow. And because the definition of an agent broker isn't necessarily that they're an expert in their field. It's basically just taking information and taking a request from a client and binding something that they're asking for. So, and you're an intermediary between a carrier and a client, and there's no fiduciary around being an expert. And that's where the breakdown lies, and that's where we wanted to back into that algorithm, if you will, and say, here's where the issues lie. Here's why people hate insurance, and it's because the buying experience is not good. And once you have that claim, and we're going on it right now with COVID, people are like, oh my God, where's my insurance when I need it? Especially if you're in hospitality.
Right.
And the reality is it's excluded. And there's a reason why in certain areas, everybody kind of broad brushes insurance, but at the end of the day, it is multiple different areas that there could be triggers of coverage. So that's from an insurance brokerage perspective. So SOLV has kind of 3 areas that we practice in. One is
real quick. I want to really underscore, I think, what you've just shared. For our kind of viewers and listeners. By the way, viewers, there's a lot of what Maria on my team said, angelic light in here today. So I promise you, hopefully the glare is not killing you guys. And it's certainly, or maybe it is me, but bottom line, I want to apologize if that's distracting. But one of the things I just heard in what you shared that I really want to underscore for our listeners and viewers is that, a lot of times it's figure out the niche and what's missing, but also a lot of times the customer and the client a lot of times don't know what they don't know, as in they don't know they need that.
Yep.
Right. And weaving through the story you just told, one piece that came up was that, hey, when you guys were going through all this diligence at the previous company, right, that you were noticing something was coming up that a lot of people didn't even know was a problem, which is there was just a lot of errors in these policies.
Yep.
And there's a huge gap and a need there, but no one knows that that's really a problem, right? And then fast forwarding it in this company between that and some of these other not uniques, but these things that you're talking about where you're really getting into the nitty gritty, it's in essence, you're almost educating people on something that they need to realize that is a problem that needs to be handled, and that there's a solution, but they never knew that was even a need until you created that, because it really is a need and you built a model around that. And I think successful companies, that seems to be one of the things that whether it's a brand or a product or a service, in today's world, it seems those that are really being successful and scaling and growing, oftentimes didn't even know that was a need, but now we know. And yeah, wow, that's a need. and you're the only one that's serving it.
Yep.
So really cool that you guys have back-ended into that.
Yeah. You know, the breakdown, Tarek, is the fact that the business is built on relationship and price.
Yeah.
And there's, you know, it doesn't matter whether it's a small, you know, family-owned insurance agency broker or a large global publicly traded broker.
Right.
Everyone it's similar to the real estate world, where everyone is their own individual. So everyone has their own individual book of business. And then they have a service team behind them, depending on how big their book of business is, to help service that.
Right.
But everyone has an underwriter.
Right.
And basically you get a 2-day certificate of, you know, and you have a license, and you go and you develop relationships, and somebody asks you, do you do cyber liability? And you're like, absolutely. And here's an application, and fill it out and give it back to us, and we're going to get you a cyber quote. And you do, but they aren't the skill set of a relationship broker versus an underwriter who reads a 200-page document and deciphers whether there's coverage or not coverage. Two completely different skill sets, not a skill set of mine. And so that's how our business was built, was understanding the breakdown is relationship broker isn't going to read the policy. Client's not going to read the policy, but the most important piece of the equation is the policy.
Yes.
Second most important, which is very important, is price.
Yes.
Relationship is third. Nobody, you know, needs a professional best friend, but relationship is important too. But it's masked in our industry because everybody loves their broker. And because you're getting hundreds of phone calls a month on your, you know, insurance from other brokers, if you need another one, you just pick up the phone. And that's where the breakdown lies. So not only did we create a solution to that breakdown, we've made it literally a no-brainer for clients. So number one, if we do diligence on policies, and we have a specific advisory practice for this. So where, you know, all of our underwriters sit. So we have a traditional risk underwriters as well as executive risk underwriters, which are areas like directors and officers, E&O, cyber, you know, those areas. And essentially they will do audits of policies. If we don't find any issues, we don't charge a fee for that. And if we do find issues, but a client says, you know what, Frank, your team is great, everything's great, this 100-page diligence document is the greatest thing I've ever seen, and it's very it's educated me a lot about what we're covered for and what we're not, and a better way to structure the policies. But I'm just going to pay you a fee for this document, and I'm going to give it back to my broker because we love them, whatever, and that's okay. You pay us our fee for our work. And it's not going to kill anybody, and you give it to your broker and they fix the policies. Or the third thing, which happens a lot, we have a brokerage practice because most people go, why would I want the traditional brokerage model at the end of the day when I can be with a firm that's going to analyze my documents every year as underwriters, as well as be able to broker. And the byproduct and the reason that's so important, so we negate the fee and we take it over as the broker, because our fee is about 5% of what the broker typically makes on a policy. So it's very, very low. Yeah. But we do diligence on those renewals every single year. And the byproduct is this. The traditional process is you take information, applications, data, information, cap tables, financials, and a broker goes to market, or their service team goes to market. They go to all the carriers, Travelers, Chubb, Hartford, all of them. They get quotes from all of them. They come back in and they say, here's the quotes we're saying are better. And it's usually boiled down to price. Because when you get a quote from a carrier, unless you request the specimen policy, you only get 4 pages of information. You get, here's the price, here's the limits, and then here's a 1.5 page to 2 page of endorsements. And if you want to know what that endorsement means, you got to order the definition from the underwriter. So it's a broken process. You never read the policy before you present that to the client. And So that's the breakdown. So it's all based on price, and all that data that's given to an underwriter, cap tables, financials, safety manuals, all this information, because they love information. They look at it all and they understand your business from a risk perspective better than you do, client. And so they put limiting endorsements, what we call underwriting opportunities, and manuscript exclusions into your policy to make sure that at the end of the day, yeah, there's going to be some limits and some big limits. But when you look at it, it's a lot of things that are nice to haves, but they aren't going to protect you in the real loss that you're going to have. And, for example, I mean, I've got hundreds of examples, but, recently we took over a program, and I'll give a technology example. Their value proposition was, it's a technology recycler. So they work with Dell and USAA and some large organizations where they take their laptops and computers that they've depreciated out. They take those back. Their number one responsibility, wipe the data clean. Don't let the data get out, because it could be from customers of Dell, it could be Dell's employees. So make sure those are wiped. They can resell those TVs, laptops, monitors, whatever. If they're broken, they can break those down and piece out the parts and all those things. Well, they're very proud of their Dell certification from an insurance perspective, to the point where they list it as one of their value propositions as they go out and sell to new clients. So we got referred into the client. Like most of the time when we get referred into a client, it's not necessarily for diligence work. It's because they get upset with their broker for either A, coming in at the last minute and jamming them with a big renewal increase, or B, they just feel like their insurance premiums are too high.
Got it.
So we got invited. We explained our business model, and that let us do diligence of all your policies, and then we'll take it to market from there. And so they agreed to, our process. And the other piece that we take into account when we do diligence is MSAs or contracts that they have with clients, because there's lots of stipulations, and it's super easy to be compliant with your client, because all you do is send a one-page certificate of insurance saying you have coverage. But you might sign a 15-page MSA with lots of insurance language in there and lots of endorsements and lots of limits. But at the end of the day, one page goes to that client, putting their name at the bottom, saying that you certify you have insurance coverage for the contract that you signed.
Makes sense.
So we matched up the policies to the contract. Our diligence report was about 80 pages long.
Wow.
And we came back in and we said, you're in breach of contract with Dell in a lot of different areas. And one of the areas in their contract, it says Dell can inspect your policies if they suspect you're not being truthful or whatnot. But Dell's not going to, they don't have an insurance arm that they're going to read every one of their vendors' policies. They're going to accept the certificate of insurance. And if you're in breach of contract, leaving Dell exposed, you're probably not going to want to get in that fight.
Right.
And you're going to lose. And number one, the client didn't have coverage for breach of contract in any D&O policies or any other policies that they had. Number two, they were required to have $10 million of cyber liability. The broker, for whatever reason, large regional broker, had said, you're covered, completely covered. Here's a certificate of insurance. Dell checks it off. And with technology companies, there's combo policies for E&O and cyber. And their E&O and cyber policy on the front page says $10 million. And on the certificate of insurance, there's one line item that says E&O and cyber, $10 million. But then there's tons of sublimits. So everything from social engineering to, breach notification, all these sublimits that give lower amounts than 10 million. And then when we got down to the cyber section, which was not on the front page, but was buried into the policy, there was a limiting endorsement limiting the $10 million for cyber down to $50,000. And so they only had $50,000 of coverage for the number one exposure that they had, which is wiping those computers clean and, for Dell or USAA or any other. So that's, and the breakdown is client thinks they're covered because they have a certificate of insurance. They're growing like mad. They don't want to lose Dell because they're 40% of their revenue. And at the end of the day, if they have one breach claim, it'll be over for them. And so that's the real risk when you're talking risk management that we look at. It isn't necessarily, whether somebody comes in on whether your building burns down or somebody coming in on your property and slipping down. Those are simple things. We look at more the complex side of risk, which is the executive risk, the balance sheet protection. So things like directors and officers, employment practices, E&O, cyber, those areas of coverage, which I call the wild, wild west of insurance. And so, that's kind of what happens. And because nobody reads it, client doesn't read it, broker never reads it or gets granular enough to read it. And the proposals that they present to the client, which we got a copy of it, is, it's done by the service team. So they think they have E&O and cyber of $10 million because they're looking at the front deck page and they're not looking into the policy. And that's how complex it gets.
Wow. That's an amazing story because it really illustrates the layers that, we as business owners never think about, never would even consider, right? And here you guys are getting into these parts and pieces and intricacies that really unearth potentially massive things that could really derail a company permanently. So that's really, really incredible work.
I'll give you one quick example. We just got done doing diligence on a local Austin, or right outside of Austin in Marble Falls.
Okay.
We got invited in through a management consultant that was doing some work for them. It's about a $50 million mining company, family owned and operated. And management consultant brought us in and said, hey, this is a risky class of business. And so we want to bring in SOLV to basically look at all the policies. And we went in, presented to the client. Client looked at it and said, we've been with our broker for 40 years. It's a large regional broker as well. And we love our broker. We go to church with our broker. We just want you to do diligence. We said, no problem. So we do diligence. They're going to pay us the fee. We come back in and on their general liability. Now this is, their number one exposure is mining. Their number two exposure is subsidence. So, if they're, carving out the earth and the earth shifts for whatever reason and the side of the quarry comes tumbling down, that's an exposure. They use explosives.
Wow.
They use all of this really, really, technical stuff. Their general liability excluded subsidence. Their general liability excluded explosives. Their umbrella of $10 million excluded mining as an exposure. So, and in there,
all the main things that they're either doing or creating in the process of their everyday work.
Absolutely. I mean, their main core business is specifically excluded. And, the likelihood, this is the reason this isn't a pandemic, is the fact that the likelihood you're going to have a claim in that one area is not that likely. The problem is when you do, and if you do, is it's going to be penalizing. And this is why people hate insurance.
Right.
And because when there's no coverage or there's limited coverage. So that's the breakdown.
That makes a lot of sense. That makes a lot of sense. Man, powerful. It's I never even knew these worlds existed that you've explained. And so, it's really enlightening and powerful and very clear on what your uniques are as a company. And it sounds like, and I think you mentioned this before, typically your companies that you guys are working with, they're doing revenues of 20 million plus a year, in that range, correct?
Yeah. So we work with private equity, family office, individual mid-market, large mid-market entrepreneurs, and risk managers. A lot of times companies that have risk managers are kind of like, well, we got a risk manager. We don't need you to do this. But, but we still find lots of mistakes in those areas as well. But we really like to deal with those entrepreneurs at the end of the day, because when you bring in your core business is excluded, it's like, I have a $50 million company, or I have a $90 million company, and I'm an individual entrepreneur doing fairly well for myself. That could evaporate overnight.
Right.
And we don't like to sing the doom and gloom, it can be doom and gloom, but most of the time it's not. Most of the time it is. An underwriter, they're smart. They know I don't want to specifically exclude it because there could be a bad faith claim that comes back.
Right.
So what I do is I give you $10 million of coverage, and then I limit it back down in the base of the policy to $50,000. I gave you coverage, you just didn't look at it. And so that's the issue. And if you have insurance, claim's probably going to pay out a lot more than if you didn't have insurance. Sure. So that's one thing. But the anxiety around not having a claim and just the ease when you do have insurance is what we're trying to bring. It's not for everybody, but at the end of the day, those are the clients that we're looking to serve.
That makes sense. Awesome. And hopefully for our listeners and viewers, not only is there an awakening, if you will, and realization of, oh, wow, I need to check some things out on my end, but they also now know the man to call here. So let's shift a little bit to what's going on currently for the business and the company and the environment that we're in today right now with COVID, and the very reason why we're having to do this through Zoom instead of in person, right? What impact is COVID having on your company, if at all? What are you guys doing in the midst of it, and so on? So share with us what's going on there that you're seeing in your company and in your world.
Sure. Well, the blessing is, our industry is pretty recession proof, and we've had our biggest months ever in the last 2 months. So part of it is, and these are kind of the situations that arise. So when Obamacare and the ACA came out, okay, a lot of buzz around benefits and those type of things. So 80% of brokers bury their head in the sand and don't want to learn the legislation, don't want to do that, don't want to answer the client's phone call to say, hey, this claim isn't covered because I don't know why. And then the others really perk up and go, okay, let's understand this and let's explain it correctly. So there's several areas from a COVID-19 perspective, there's that I like to talk about, but it's created a lot of buzz. It's created a lot of diligence because now people are like, oh my God, I wasn't covered for this. What am I not covered for?
Interesting. So yeah, you guys are actually busier because everyone's worried about what they're not covered in during this time. There are these bigger companies and entrepreneurs and et cetera. Okay. Interesting.
Yeah. And everybody just kind of boils it up to, okay, insurance, I'm not covered, but there's so many different areas in this particular one. So from a property perspective, property is a direct damage coverage, meaning, if your house burns down or your business burns down, you have business income coverage while it's being rebuilt.
Right.
But if your neighbor's business burns down and you lost some revenue for whatever reason, the police truck or the fire truck was in front of your facility and your customers couldn't get in, whatever the situation is, there's no coverage for that. That's your neighbor's issue. Coronavirus or COVID-19 didn't happen at any one person's place of business. It didn't evolve.
Right.
And so the damage has to be direct damage to the property. So that's why that exclusion is there, number one. Number two, on top of that, there's a virus exclusion. So if you were able to even get around, the virus exclusion, because insurance companies still make mistakes. There wasn't virus exclusions on every one of our policies. But when there's not a virus exclusion, they go back to direct damage. So there's no coverage. But ultimately, a lot of people are like, there's other exposures you have. So what happens when you get a lawsuit by a customer because, you had, HEB, for example? What happens when you have a customer that comes down with coronavirus and now you have a lawsuit or a class action lawsuit based around, I was there and supposedly there was an employee that had it. So now I'm suing you for my medical bills and for, God forbid, my relative that passed away. So, that's under general liability, which is bodily injury and property damage. The good thing about general liability is defense cost is outside the limit of liability. So you do have coverage for that claim. Then, go one step further with employees. If employees come to work, you make them come to work because you're an essential business.
Right.
They get affected with coronavirus and, God forbid, pass away. Obviously the medical and indemnity, the burden of proof is on the customer and or the employee that they got it at work. Yep. But once they prove that, then their medical and their lost wages from having it are covered under workers' comp. And God forbid, if they pass, the family could come back and sue the employer for putting that employee in harm's way. So there's coverage for that under Part B of workers' comp for employer's liability. So there's coverage there for coronavirus, just not what typically people are thinking about. But what we do, and this is, if you take note to anything that I say in this whole thing, make the claim. So turn the claim in, get the denial from your company, because this is going to be an interesting situation from a legislation standpoint. So we've got New Jersey and Pennsylvania that are coming out with legislation that are going to force the departments of insurance in those states to provide coverage. How they're going to do it, no idea. Because once you get over, let's say they add in virus coverage, number one, the insurance company didn't charge for that exposure, so that you got to get around that.
Right.
Even if you add coronavirus in and virus protection into the policy, you still have the direct damage issue. So this whole debate will be interesting. But what you don't want to get into is a late reporting notice claim. So let's say the legislation comes out in 2 years, you lost a few $100,000, but you never turned it in because either your agent possibly, or maybe even the carrier. We had carriers telling us, tell your customers there's no coverage, so don't even worry about turning in a claim. And that's an E&O waiting to happen. And so ultimately, turn in the claim, have it on the books. If there's legislation that changes, you can open up the books back and get paid for that if there is any. The other thing is, I've had several clients calling me lately. I'm getting bombarded with attorney firms and class action suits around this. So, whether you get into those or not, that's your own thing. We all know who wins in those situations. Sure. All on the bearer of, the person who actually lost the income. But anyway, moral of the story, turn the claim in, get the denial letter, hold on to it as we see what plays out.
That's huge. That's really strategic advice, because I don't think anyone would think to just go ahead and make that claim, even though there's not, quote unquote, coverage for that right now, because, hey, there may be some things that are changing down the turnpike, and you have an opportunity to go back to that then. So that's huge. It's massive. Thanks for sharing that. Since business isn't down for you guys, so to say, given that, actually more people are needing your expertise right now, right, from a protection perspective, an insurance perspective, are you guys doing anything different in terms of business model or adding any layers, right? So I'm finding that either entrepreneurs and their businesses are either taking a hit and they're figuring out pivots,
Yep.
right? Others are maybe, business as usual, and they're not necessarily needing to do anything. Others are thinking, hey, we're going to be fine in here and through this. And here's a time to add this to our model, right? So I'm just curious as to where you guys are as a company, especially given you're in different locations, right? In a few different locations in the state as well as out of state.
Yep. And great question. So we actually are. So April 1st, I brought on Jonathan De La Rosa. He was the chief compliance officer for a cryptocurrency Bitcoin company out of Atlanta. And he just joined us as our risk and compliance officer. And we're, like I mentioned earlier, we have our advisory practice that does the diligence. We have our brokerage practice that does traditional insurance brokerage. And then we've just launched our compliance practice. So we do a big sector of our business, because we love complex risk, is financial institutions and fintech companies. Part of the reason for coming up with this compliance is the fact that I don't like, and our firm and all of our folks don't like to just give someone a policy at a good price and then walk away. Like, we want that to be implemented, but that's usually what happens. So cyber liability, for example, there's more to, cyber, because everyone's going to have a breach at some time if you already don't have one. Right. And but there's kind of three pieces to cyber. There's the security. That's one piece. We're not a technology company, so we're not going to get into that world. But and then there's the cyber liability. So we check that box because the CFO calls us and says, hey, I need a cyber liability policy. But the third thing is, what are the processes, procedures, protocols when you have the breach? And we wanted to get more granular on when you do have the breach, because whenever you hear about these large breaches, and that's usually who it is, the Targets and the whatevers, usually somebody gets fired. And usually it's because protocols and procedures weren't set and or followed.
Right.
They didn't let the board know for 6 weeks, or they didn't let clients know for 8 weeks or something like that while they were trying to repair the situation. You need to have really strict, because the last thing you want is a regulatory body, a governing agency coming in and saying, hey, we're going to fine you. We're going to do all these things because you didn't follow protocol and you don't even have protocols. So anyway, so from a compliance perspective, we're helping clients build that processes, procedures, protocols around cyber and security. The other piece that kind of came out of this was anti-money laundering. So we do financial institutions and fintech companies that are actually required by the government to have certain anti-money laundering processes, procedures, protocols, independent review, licensing, all of these things. And if you don't do it, and you're a $50 million Bitcoin company, and you don't have all of this stuff in place, they will shut you down. And, all money service businesses, Western Unions, all of these companies have very, very strict AML compliance. So we're going into these companies and basically executing these compliance platforms and then bolting on our cyber piece, because they all have cyber risk exposures. So we've launched that and it's going like gangbusters. We're getting a lot of our current clients from are like, absolutely, because the market especially in AML compliance is very fragmented. There's lots of small individual consultants, but not many large players, except just like every other industry, the big five or big four, whatever you want to call them. But their service fees versus a smaller firm are going to be a lot different, and sometimes they won't even work with a $10 million fintech company that only has a $15,000 budget for AML compliance. And and we also do outsourced compliance officer for small banks, less than $1 billion in assets, and also fintech companies that are smaller and growing startups and whatnot.
Nice.
So yeah,
I love it. You guys are really expanding services. Again, in areas where there's a need and almost they don't know there's a need, and you're tying it all in together with what's going on. You have the ability to expand, and you're expanding. I really like the strategy around that. Very cool. Very cool. And we've got just a few minutes left, but I want to ask two other quick, important questions I think that'd be valuable for our listeners and viewers. One, and I'll just ask both of them and you can answer, whichever one you want to go for, answer first. One would be, how is this impacting, anything around real estate for you guys, right? Whether it's on the business level or personal level, with COVID and et cetera. So just kind of tying in some real estate conversation, given that's the space we're in. So I'm curious about that, and if there's been an impact from COVID around leases for you guys and so on. The other question is, obviously we're all working from home and as entrepreneurs, we work from home anyway, quite a bit, or other places where we can really get into flow. But what are the things that are really working for you to really get into flow in this time, given you're working from home more, and what's effective in your workspace? So those would be the two questions.
Yeah. So great questions. Number one on the COVID topic. So we've got a couple different areas. One is clients of ours. So we deal with, we've got some very large private equity real estate groups that we serve. So trying to help them and we've got some, hospitality private equity companies that are really, really starving right now.
Yes.
And so trying to help them navigate that from a resources perspective. So we do have industry specific stuff that we can get from carriers and some proprietary technology that we have. So we've been sharing that. Been doing some talks for clients on basically what, on a broader level of what I talked about earlier, what's covered, what's not covered. And then, our own landlords, obviously we're blessed to be in the industry we're in. So, paying our rent on time is very, very important. We just finished a build out in our Houston office, and so it's, paying our rent through that process is key, because they're really, really hurting right now and renegotiating their, their leases and whatnot. And so, and then on a personal level, I'm building a house right now and got a little scare in Austin because, the mayor wanted to shut down and didn't want to have construction companies as essential business. So we were chugging along and super excited, and then just got shut down. But we're back up and running. So that's been great.
Okay, good. And I'm glad to hear that on the real estate side, you guys aren't taking any hits or struggling. Obviously the company not having to take a huge hit right now is a big part of that, but that's awesome to hear. Cool. And then I think we have just like a minute or two. So tell us a little bit about, what works for you right now and being really effective at working from home.
Yeah. A couple of pieces of advice.
Yeah.
One is, if you work from home, don't have kids. But I have 4 sons, so that are here, and they don't want to necessarily be here, and they're getting restless, and lots of fighting and all kinds of good stuff. But all good. And then don't buy a puppy during a pandemic. So we've kind of gone.